Mastermind, so I'm going to go live in just a minute. Oops, going now. Here we go. But it's not top of the hour yet. It is, but we're getting ready to go live, folks. Hi, everybody.
Hey, everybody. Good to see you. Welcome to Conscious Crypto Traders. Thanks for those of you who've been waiting patiently online for us to go live. Welcome, and welcome no matter what time or place you're in. So this is the headline we've all been waiting for, right? The Federal Reserve just put out their press release not even an hour ago, or actually almost exactly an hour ago now. And everybody was wondering, is it going to dump the market? And if it dumps the S&P 500, Bitcoin's probably going down. So we'll be talking about that in a minute. What else have we got on the agenda, Nicola?
Yeah, guys, so the agenda. Thanks so much for joining us. We've got a really good agenda today. As always, we're going to be doing price analysis, technical analysis, but we'll start with what this means and what happened when the Federal Reserve made their announcement. A little bit of a fizzer, but there was some excitement in the charts there. And where are we going to from here? We're going to do the Bitcoin analysis. And the whole point of today's live stream, like every live stream, if you're new to our channel, every live stream we do while we're doing market analysis and looking at Bitcoin, Ethereum, XRP, and ADA, we're also teaching technical analysis and how to become a better trader, and also how to have a better mindset. So it's not just giving you all of these numbers, it's giving you the tools that you can then use, go away and actually start becoming better at your own technical analysis. So today we're looking at how are we going to profit from this next bull run, and what is involved in that. And that's going to bring us to talking about stop loss strategies, because believe it or not, in a bull run, when the prices are going up and up and up, some people can still get wrecked when we start coming back down for a little price correction. So we want to make sure that that doesn't happen to you. So we're going to use that, use the technical analysis to help you with that. We're going to do a technical analysis on Ethereum, and then looking at how do you scale in and out of your trades, and the psychology behind that in order to increase your profits. Always talking about managing your emotions, and then specifically fear and greed. We've been in fear because people haven't known, are we going down? Are we going further down? What's going to happen here? So we want to kind of manage the fear, because there's been money that can be made and trades that could be made, but so many people holding back in fear because they don't know what they're doing. So we definitely want to be talking a little bit about that today. We'll talk about ADA. We're going to talk about our Conscious Crypto event and a special surprise announcement about a really awesome video we're uploading tomorrow. So take it away, Teresa. Oh, before I hand it over to you, Teresa, if you're new to our channel, we're a really new channel. We're growing relatively fast, but we do appreciate your support. So if you want to click that like button right now, if you haven't already, to show YouTube that we're putting out really good content, that would be awesome. And obviously subscribe if you're wanting to get our live streams and our video tutorials with technical analysis training that we upload every day. Up to you, Teresa.
So one of the things we talk about on Conscious Crypto Traders a lot is the scenarios that can affect the price action. And this is one of them, right? When the Federal Reserve makes an announcement around what's going to happen with the interest rates, that has the potential to drop the S&P 500. And generally when the S&P 500 plummets, it takes Bitcoin and other cryptocurrencies down with it. So a lot of YouTubers were talking about this one this week. Shout out to Mango Research, who did an excellent video on this yesterday with Sean and Krisha. We're hoping to get them as speakers on our Conscious Crypto event that's coming up, by the way. So, so stay tuned to hear more about that. But essentially what we're talking about here is the difference between whether the Fed is hawkish or dovish. These are the two terms you often hear talked about in the industry, right? So a hawkish policy means they're going to raise interest rates, and that usually causes the market to dump. A dovish policy means they're keeping interest rates low, which is more pro-industry, that keeps industry strong, and no market dumping happens. Well, this is about as middle of a road as a press release could ever get. They basically said, okay, we are raising interest rates, but we're not doing it for 18 months. what? So I think the market wasn't quite sure how to react to this. It's like, so do we dump the market or don't we? They're raising interest rates, but we have a reprieve for 18 months. And a lot of traders weren't quite sure, what was going on, right? And I think we saw that reflected in the numbers in the last hour. If you look at the S&P 500, this is what happened in the last hour, right? Big dump, big wick up when they realized, well, we still have 18 months reprieve. We might still see some dumping. It's like the market's having trouble deciding. The bears and the bulls are fighting it out a little bit here, right? Do you want to take us over to Bitcoin, Nicola, and
Yeah,
talk
sure.
about how that's looking from Bitcoin standpoint?
Yeah, so here, like literally, this is one big interesting spinning top. I mean, I don't know if you can call that a spinning top. We were debating that before we came on live, but look at this, wick up and wick down. And when I was watching it, I'm in a short and all of a sudden I'm seeing a pump, and it pumped and it pumped and it pumped and it pumped. And I'm like, what? And then I just went, you know what, it's going to be okay, because all that actually happened is that we have come back to touch the support line that has now flipped resistance. You see, with the price of Bitcoin, we've been trading sideways in between these lines here, up at around 41,000 all the way down here to 39,700. So normally when we break out of a pattern, not always, but normally we break out, whether it's up or down, we come back to test the previous, in this instance, it was a support line, to see if this is a resistance line, to confirm we're going to continue to go down lower. So that's all that happened. And when you have your lines drawn in properly, you're not going to panic. Talking about managing fear, I could have got really fearful and I went, oh yeah, no, it's just going to come up here and it's going to touch this line to confirm it as support or resistance. So what happened was that it pumped and then it just did a U-turn and got severely rejected. Look at that rejection there. Ouch. And it came back down into the downward channel, or the descending wedge that we had previously been coming down into. So we were going down. And then if we zoom out a little bit, right, all that's happened here is we just created a lower high. So we've got a high here, a high there, and a high there. So this is still showing that we're trending down for this time. So the question is there anything else you want to say about that spinning top before I move on to market structure?
No, that sounds great. I just want to thank people for starting to type on the chat board too. Let us know where you're calling in from and what time it is where you are and what your day is like. Feel free to just fire some chat away and we'll get to your questions a little later on the call.
Yeah, exactly. So what we want to do now in the Bitcoin technical analysis, always in doubt, zoom out. We want to look at, well, where are we going? How far down are we going to go before we start going back up? So it's always good to come out and have a look at the monthly, and you'll see I've drawn the Fibonacci lines for Bitcoin from where we started the bull run, or we just started price increase for this season, all the way up to the top, and we'll find that we are trading underneath the golden ratio here. Just like on the monthly, we've touched it and we've just come back down. And this is part of the reason why a lot of traders have been a bit concerned. Are we going to head down all the way down here to 21,735, or are we going to find our bottom here and work our way back up? That's what we want to discuss. So on a monthly, we're still looking structurally like we're in a bull run. We just had this massive correction, and this green candle here for the month is showing we're on our way back up. So hopefully it does continue to close green. So then what we want to do is we want to come out to the weekly and go, well, can the weekly tell us anything more about where we're headed? And this is where you see that we had this massive dump. Here's the bottom, and then we started trading inside of this pennant. You could call it a bull flag, and this is a bear flag, excuse me, which is one of the reasons why we had the whole, the Wyckoff distribution, FUD, and talk that we were going lower. But we have broken out of this, right? And this is what we're in the process of confirming. So now when we come down into the daily, so even on the weekly, we're looking incredibly bullish, short-term bearish. But if we come down on the daily, we've just come up to retest. Usually when you break, we're coming down to retest, excuse me. When you break out of a pattern, as I said before, it's usual that you'll break out, you'll come back down to retest. In this instance, we're retesting this previous resistance line to go, is this support, right? Or are we going to come back down into the pattern and go down? So we're coming down right now to retest test this. Whether we come all the way down and touch this line or whether we fall short, get rejected and go back up again, that remains to be seen. So here's what we need to remember. We have a CME gap. And I've been posting this a lot in my Crypto Ninjas VIP Mastermind. So for those of you who are here, yay, great to have you here. And we've been talking a lot about the CME gap. The CME gap is or do you want to explain what CME is? So I give my voice a rest and I'll just set this chart up.
Sure. The Chicago Mercantile Exchange is the biggest exchange in the world. And it closes trading just before Friday evening Central Time and opens up again Sunday afternoon at 4 p.m. Central. And often there's a difference in price from when it closes to when it opens again, and that's considered the CME gap. And most of the time, this is one of the scenarios we study for Bitcoin, most of the time that gap closes within 2 or 3 days of the gap being formed. So right now, it's Wednesday, everybody's watching. Are we going to see the gap close today? So, and it's worth noting that the top of that bear pennant that we just broke out of is actually pretty close to where that CME gap is. So even if we come down, touch the CME gap, confirm that line as support, although that's bearish on a short-term horizon, it still could mean we're turning bullish in the long term, as Nicola was saying.
Yeah.
So we might see a bearish afternoon.
Yeah, I've seen a number of numbers floating out there, but I have the CME gap at around about 37. I think it's 37,645 or 37,325. It could come down a little bit further if you're going to count the top of the candle as opposed to the wick. You can see right now as we speak live here. Show you've seen it here first. We've already started closing the gap. You see it starts here, and look at that red candle, right? If I put that line there, that's where the gap starts. It's already coming down. So it's going to come down and touch this. Will it go down to the 100-day moving average and go lower? Possibly. But where it looks like it's going, the CME gap is, as Teresa said, on that, we want to get it on the 1 day. For those of you who are new to my charts, I am a creator, and so I get I get really creative. See, like all we're doing, like the CME gap, see here it is, the very, very bottom of the gap, 37,325. That is right where the support line is here. So we could come back here and hopefully bounce off of it. If we don't and we go a bit lower, it's possible we could come back in, because you see how we're trading sideways. We could come back into this, come back down, touch the Fibonacci level of 33,170. If something was pushing the price down, we could always go back down to 30,199, create a double bottom once and for all, say the bottom is in and now we're going to move up. So at the moment though, with the Ichimoku Cloud and everything, it's looking like it's just coming back to close the CME and then reverse back upwards. I mean, obviously we will see. So at the moment, you wouldn't short this because it's a bit too late. What you would do is you would set up your next long and look at, look at putting in an order for a long at the CME close, and then adjusting it from there as we go. But here's this arrow. This is where we're headed. We're coming down in a downward channel. We're not going above it other than this wick, and we're not going below it. So time frame wise, we're looking at hitting the target around about, this evening. So once again, it'll be probably the Tokyo and the Chinese market that decide how far down we're going to go, right? Unless it closes
your
before.
hands, guys. Be kind to us.
What was that, Teresa?
I said, our fate is in your hands, to those of you watching on the other side of the pond.
So. Oh, yeah. Yeah. But that's basically where we're headed. So let's talk about stop losses. We are going to do market analysis on Ethereum, XRP, and ADA, but our style is that, we want to give you price action and technical analysis, but also how do you apply that to be a better trader? So our lesson today is on stop losses. So do you want to start on that? Or do you want me to read through the list?
Why don't you start with reading through the list, and then we'll go down them one at a time.
Okay. Okay, cool. So we have 5, maybe 6 different theories or different mindset approaches to how you want to approach stop losses. Actually, Teresa, do you want to share your screen? Because I can talk about it, and then so the first one is the 5% tight stop loss. Whenever you put your trade in, you can click 5%, and that 5% will be 5% of the actual position that you've got as a really tight stop loss, right? So what would that look like? That would look like,
and the thing to remember when you're doing 5% stop losses is that's going to vary relative to the amount of leverage you're using, right? And so if you're using super tight stop losses like that, with high leverage, you're going to be getting stopped out all the time. So it's important to think about then your stop loss relative to the amount of leverage that you're using.
Yeah. And normally you can see Teresa's chart here, see how we go up and down and up and down. And sometimes you'll enter the trade and it'll immediately go in the opposite direction just briefly, right? So you got to know your charts, know your fib levels, know where everything is going, so that you don't inadvertently jump out of a trade that's going to end up being a perfect trade. So putting in a tight stop loss is good. I think it's a good strategy if you don't want to lose any, lots of Bitcoin or whatever the coin is that you're trading. And it's good specifically if we're taking off. Like if we're taking off, we talked about how to enter, when to enter a trade in a couple of live streams ago. So we'll leave the link down there for you, because we talked about taking off once you've got a confirmed breakout, which means that volume is there to push the price up. And as it pushes the price up, it's not going to come back down to where you're entering. So a 5% or a tight stop loss in those kind of trades makes sense, right? Because it's unlikely that you're going to get stopped out. The other one,
I think the important
thing to
remember is if you're using tight stop losses like that, you really need to be nailing your entry points. So this is, sorry, let me shut off my charting here. I always look at the 1 minute to enter on the 1 minute, and you want to be looking at the indicators. Does the Ichimoku agree with this trade? Is the RSI bottoming out? If it's not, you're not using a 5% stop loss. I use some specialty indicators too, which are paid indicators that help me nail the entry points. But if you're not really nailing your entry points, then using 5% stop losses are a real risk. So if the market's not already breaking out, or you're not super confident in your entry point, then that's often just an invitation to get stopped out, even though it might have otherwise been a winning trade.
Yeah. So we have a neat comment here. These purple charts are absolutely insane. How can you read anything on this? Yeah, it like as I said, I am creative and visual, so I get really strong instincts, and I need. It's kind of like pickup sticks. It's like I will see things in the charts that no one else on YouTube is talking about it before they actually start talking about it, because all of the patterns are there, and I just have that kind of mind that can read it. We do kind of pare it back a little bit for you guys, which is why I've got 2 Bitcoin charts that I show you, so that we take all the noise out. But yeah, that's just the way I roll. So
I love that he loves your
it's
purple,
like,
though. I color code my charts, just so you guys know, so that I always know if I'm looking at a longer term horizon or if I'm looking at a shorter term horizon. So I've trained my brain to know quickly which time frame I'm looking at based on what color the chart I'm looking at is.
yeah, exactly. And a lot of it, like a lot of it is personal preference, because everybody's brain is wired differently. And, people have a visual component to them, or they're more kinesthetic, or they're more auditory. And so it just depends on what your learning style is as to how you actually want to have your charts. But I will, as I said, I will see things. And we were talking about some things here on the channel, just as because we're a new channel, we just got started with the channel before people like Crypto and even Carl from the Moon was saying it. And then like about 3 or 4 days later, they're mentioning something that we'd already seen, because we have everything in there. And for me personally, it means I don't miss out on anything, and I get to see patterns earlier than some of the other technical analysis on board. Number 2.
Well, it's relevant if you're using tight stop losses too, because if you don't have all of the market structure charted out, like if you scale out here, you'll see on this pattern, some of these are just smaller patterns I was trading, but some of these are key support lines that are starting to be respected in the market, right? And some of these go back from the weekly or the monthly timeframes, right? So the reason you want to have all of these plotted on is if you're entering a long or a short that has one of these support or resistances just above it or just below it, you really want to be thinking about that, because that's more likely the direction the market's moving in, right? And you can see I've got this green band plotted on up here as a whole channel, because this is going to be an area where we've had a ton of all-time highs and market lows. This region here is going to represent massive resistance to break through. So, if you're entering along and you're just below this area, I wouldn't be trying to do keep a multi-day trade open. You can expect lots of bounces back down before we ever break through this area, right? So you always want to be taking into account these support and resistances when you're thinking about where your stop losses go, and whether or not you're entering the trade at a powerful enough position that you can use a really tight stop loss. And if it's not a super powerful position, either it's a get in and get out, in other words, you're scalping, or you need to use a longer stop loss, or wait, have a little patience, because truthfully, patience is one of the more important ingredients to making money as a trader.
Yeah, for sure. So that's that green channel is around 40,000 up to 42,000, isn't it? Something like that, or 42.5?
Just above 40,000 up to about 42.5 roughly.
Yeah.
And if you scale across, you'll see multiple rejections in this area, as well as, previously numerous all-time highs or market highs in this region, right? The major shoulder for the last all-time high before the penultimate all-time high we had was in this region, right? We peaked, this was an all-time high here, and then we had another all-time high. So this is a zone where there's just a lot of market activity. We've got Fibonacci levels right in the middle of this zone. Lots of reasons for both resistance and support in this zone. So when we ultimately break through this zone, we're probably going to see serious bullish action, but I wouldn't expect us to break through this in one run. Like, we've already made an attempt through it. We're probably going to come back down. We'll probably make another attempt. We might get rejected somewhere else in this zone. It's going to take a lot of volume to get us through this zone.
Yeah. For those of you who have just joined us, we're just doing the technical analysis and talking about stop losses. And number 1, stop loss is 5%, or in relation to what your leverage is. And also we talked about that it looks like we're going down to close the CME Gap, which was created on Sunday afternoon. And here are my insane charts with the purple background. And so the other way that you can approach stop losses is by using the Ichimoku Cloud. I use the Cracking Cryptocurrency Ichimoku Cloud because it's set up for cryptocurrency specifically. And these represent, if you're new to Ichimoku, there's green and red clouds, and they represent, have we got any red here? Yep, here's a red down here. They represent support and resistances. So when you're looking at your stop loss, say for instance, there is a short potential, like if you were to short this and you shorted, where would you put your stop loss? Another theory for stop losses is just above the Ichimoku Cloud here, because if we retrace, we could go all the way back up here. So if you put your stop loss just at 40,274, then you can have all of this volatility, leave the trade open and get those bigger gains for bigger movements, rather than getting stopped out, losing money, and then finding that the trade is a viable trade, and not only that, it's a really big trade, and then and you lose out on those profits because you fell short of the stop loss. So that's number two. Number two is using the Ichimoku to put your stop loss just above it, because this is going to act as support and resistance. Here's an example down here where we fell
on the far side of the cloud from whatever direction you're trading, right? So if you're trading long, your stop loss would go below the cloud. If you're trading short, it would go above the cloud.
Yeah. So I was just going to show that here. So like if you're doing a long here, right? So we came down here, we touched.
Click off your lines for a minute so it's easier to see the cloud, Nicola.
You can't. I can't. Like if I just do that, it takes everything off. Oh no, here we go. Here we go. Okay. Awesome. Okay. Oh, I didn't know that. Great. Awesome. Thanks. So here we fell here, and you'll see that the wick just went a little bit below the cloud. That's why I said if you're going to set your stop loss, you want to do it just a little bit below where the cloud is for those wicks. But for example, if you were to have longed here, and you just put, for some reason you long, you set your stop loss below the cloud here because we're longing. So it's the opposite side of the cloud, right? And then it came down, you'll see the cloud actually supported it. And if you'd had a tight stop loss, you would have got stopped out, lost some of your coin, and then boom, we pumped. And look at that. We went from 34,700 up to 40,500, 41,300. And you would have missed out on all of those profits because the stop loss was too tight. Does that make sense?
Yeah, really good. It's important to understand, Nicola and I both love the Ichimoku Cloud, by the way. I think it's one of the most powerful indicators in any trader's arsenal. When the Ichimoku is about to flip bearish to bullish or vice versa, it's bearish when it's red, it's bullish when it's green. It's a general rule of thumb, but the cloud will really narrow. So this is one time where putting your stop loss on the far side of the cloud is riskier because the cloud will be a lot narrower. When it's in that flip mode, trading is not as likely to be supported within the cloud. Trading's more likely to go through the cloud. So in that one instance, I would not use this scenario to inform you on where to put your stop loss.
Yeah. Well, I like using everything that we're telling you. Number one, tight stop loss, if you're doing a takeoff strategy. Number two, for the Ichimoku. But number three is your moving averages. So when you're using the Ichimoku with the moving averages, that can also really be a lot more stronger as well too. So in this instance, if you were to use the EMA ribbon, for example, and you put your stop loss just above it to counteract those wicks, your short would have been saved. If you put it right at the EMA ribbon top, you would have got stopped out. So that's why it's always good to just pip it up a little bit for those wicks. Does that make sense? And
Yeah.
yeah, I'm just trying to think. This yellow one, by the way, is the 100-day moving average. So if you're using the Ichimoku, say I'm doing a strategy where I'm using both. I look at this and I go, oh, look, the EMA, say I entered my short here, boom. And I go, you know what? Here's where I am at with the EMA ribbon. So if I put in my stop loss at 41.89, I would think that's going to be pretty cool. But then I will look over at the Ichimoku and I will go, you know what? I'm going to put it up a few pips above because the Ichimoku Cloud is just there a little bit above. So I need a bit more room, because if we come up here, we fall short of the EMA ribbon top with this orange as the 20-day moving average. And so we could get stopped out if I set it there. So by using the two together, I can get pinpoint accuracy to the pip to create a little bit more space for that volatility. And this has been something I've been studying a lot of, because I was getting stopped out a lot when I first started. I didn't quite get it, but now, you know, like now that I'm combining all of the different strategies to get those better areas of stop loss, I'm not getting stopped out as much, and certainly not getting liquidated. So number 4 is putting in your Fibonacci levels. So let me just put that back in there so I don't lose that, and we'll go over to Bitcoin. And generally speaking, with the Fibonacci levels, I like to start with, I need to go BTC Coinbase. I like to start, as I showed you right in the beginning, doing your Fibonacci levels from the very lowest point where we began our ascent in the bull run to the all-time high. And that way you've got the market structure for the entire run. Then on top of that, I'll put in Fibonacci levels for the movements to get those impulses. So I might grab my Fibonacci tool here, and depending on whether I want to know how far are we going to go to the downside versus how far are we going to go to the upside, is where I would put it. So in this instance, I want to know how far are we going to drop with this current short that we're in. So I just would put it at the very bottom of the market, price falling rather, and then I would put it up to the top, which is just above the market Fibonacci level by a few pips. I have set my my Fibonacci levels. Sorry, hang on a second. Let me just pull that down. I can't quite see. I've set my Fibonacci levels where the golden ratio is a gold color, so I can see it really easily. And you can just do that by double clicking on it, and then at the 0.618 and the 1.618, you turn it into gold. And that is a really good stop off point quite often for trading. And you'll see here that the golden pocket, we are just under, and in this last pump, we didn't go all the way to it. So using the Fibonacci's to go, I'm just going to go above the golden pocket here on the market structure, or the golden pocket here on that smaller impulse Fibonacci tool that I just drew. Either one of those is a good place to put it if you're shorting. Now, obviously, if you were longing it and you want to know how far could we go down from there, you would do the opposite. You would do your Fibonacci retracements from the top of the move to the bottom. And if you were longing here, you could then use those Fibonacci levels to go, you know what, we're doing higher lows. So if we were to come down to this Fibonacci level here and create a double bottom, that's actually possible in this market structure. So I would tend to put the stop loss just under it, because if we do go under that, then we're probably going to go way down. Or you could put it, if you had other confirmation with the Ichimoku Cloud and what have you, you would look at this level here and go, well, we're doing higher lows. So if we go lower than this, it means we're going to go lower. So you get out sooner and your stop loss comes up a bit sooner. So if it does go lower, you lose less. Now, the only caveat with all of this is market manipulation, right? Do you want to say something about that? Because a whale can come in and just, it's not going to matter where your stop loss is, you're going to get liquidated, right?
Yeah, I mean, and there's always a risk of that. In fact, you know, we talked about this last call, the difference between an A book and a B book exchange. You know, A book exchanges provide their own funding for the leverage. So they tend to be a little bit more volatile because the exchange itself might be betting against you, right? There is known stop loss hunting happening on some of these exchanges, right? So the B book exchanges tend to be a little less volatile, and you can get away with slightly tighter stop losses on the exchanges that are providing third-party funding sources, because then they want you to win. They only make money if you make money, right? Yeah. I think bottom line, and that was just an awesome explanation, especially how to use the fib levels. Bottom line, either your leverage needs to be informing your stop losses, or your stop losses needs to be informing your leverage, right?
Yes.
Because you need to have a good risk management strategy. And conventional wisdom is, especially in crypto where it's a little more volatile, conventional wisdom is you never bet more than 5% of your whole portfolio on a trade. So if your margin is 10% of your trade, but your stop loss is set at 50%, then that means you're risking 5% of your overall portfolio. Is that making sense? In other words, you know, you can use 10% as leverage, but if you're only risking half of that as margin rather, but if you're only using half of it because your stop loss is halfway up, then you're risking 5% of your portfolio. So you need to know which strategy you're using. So have a set of rules, and every trader develops their own set of rules. So it's, you know, I use a slightly different set than Nicola uses, but you also need a set of rules for when you're going to bend the rules.
Yes. Yeah.
So, you know, for example, I often use the Ichimoku Cloud to inform my trades, but if I don't have confidence that the Ichimoku Cloud is providing me a good safety net, then I also look to Fibonacci zones and other things, major areas of support and resistance in the market, right? I also look at the VPVR, which I think is one of the things coming up that we're going to talk about.
Yeah. So for those of you who just joined us, we are about to go into Ethereum market analysis. If you've got any questions, I've got everything open here. So we can answer any of those questions. We're talking about stop losses. So just to reiterate, you can do the 5% tight stop loss, making sure that you've only got 5% of your trading portfolio in the trade, so that if you do get stopped out or you lose, you can trade again tomorrow to make up for the losses. You don't want to be putting everything in. Number 2 is using the Ichimoku Cloud. Number 3 is using the moving averages. And number 4 is using the Fibonacci levels. And number 5 has to do with the number 2. And we have a very special video that's going to get uploaded tomorrow at around 11 a.m. US Mountain Time, of an interview I did with Da Vinci J15 this morning. And he talked a lot about stop losses, and he talked about number 2 being a really important number. So be sure to subscribe, so you're going to get notified when we upload that video tomorrow, or make a note to come back to the channel if you're already a subscriber and watch that video, because we did strategies, we did his particular stop loss, we did a number of really awesome in-depth conversations there in that video. So let's have a look at Ethereum.
Actually, one more thing I just want to mention on the topic of stop losses before we move on.
Okay.
I don't use this as a strategy, but I usually check the VPVR as a confirmation when I'm setting stop losses, right? So this is an indicator. It stands for volume profile visible range. It's this indicator you're seeing over here. And I love this as an indicator. It's super powerful as an indicator. because it shows you where all the volume in the market is at what price levels, right? So we can see right now, the amount of volume that's below us right now suggests the majority of the market thinks the market's bearish, at least coming down to the CME close. Like, look, the CME close for this gap, all of the volume is below it, right? Not all, but you know, the lion's share is below this level, right? So you can use this as a confirmation, because if you're in a longer trade and you want to see where the market might go, well, there's good odds that this amount of volume is going to stop the price when it hits this level, right? And vice versa, if we were trading up, you know, there's key levels here. See, there's a lot of volume here at the very beginning of this resistance band that we were talking about, right? But the majority of the volume is below us. So that's a great indicator that the dominant market sentiment right now is bearish, at least on the immediate short term, not necessarily in the long term, right? So this is a great thing to double check whatever other strategy you're using. I don't normally use it just to set stop losses, but I always check it before I confirm based on the other strategies.
Yeah, cool. Awesome. So let's let us look at Ethereum. And this is the monthly. So Ethereum, you can see, is also trading around about the golden pocket. So it's a little of the actual market structure on the Fibonacci level. So it's actually looking a little bit stronger than Bitcoin. As we go out onto the weekly, and we kind of see that we just went up and we just came crashing back down again, but we are being supported somewhat by the weekly EMA.
Good blow off there. Really good example.
Yes, exactly. Yeah, but you can see the Ichimoku Cloud is starting a small ascent on the 19th of July, where we can slowly start to see prices come back up. So if you're wanting to know what my theory is on whether or not we're going to go down below 20,000, I think at this stage it's unlikely. It's always possible. If anything, we could go back to retouch 30,000 for Bitcoin and 2,000 for Ethereum, but I'm not really seeing, you know, massive downward action. If we look at the Ichimoku, it looks like we're getting ready to have a little bit more downward action here with this here. And again, this is really interesting with Ethereum. If you can see these pink lines here, this one here across, and then this pink line going up, that is an ascending triangle that we've actually broken down from. We touched this Fibonacci at 2245. We came back up, got stuck in the EMA on the daily, right? So that's our confirmation that this line here has flipped from being support to resistance, and now we're coming back down. So where are we going to go? I mean, the technical target for falling out here is around 1635. And that's just the technical target. So unless this breakout gets invalidated and we turn around and go back up anytime soon, at the very least, we are heading towards 2245. And then the next stop off would be the 100-day moving average, which is 1974. And then the next stop would be 1724. And then the final stop would be 1628, 1630, somewhere around there. When you're setting your take profits, you usually want to set them a few pips before, just in case we fall short. But that's kind of like where we're at with Ethereum, is like, you know, it looks like we're going down. And of course, if Bitcoin's going down, we'll go down. If we touch 2251 and then go back up from here and then start rallying, that would be awesome, because once and for all, we've got a kind of like a double bottom confirmation. And then we can have confidence that we are heading up to further into a bull run. If we come all the way back down to 1734, which is the last candle, you know, the big dip that we had here, that would also be confirming a double bottom. So either way, we're really close to good news. Like even short term, right? So for me personally, I don't short these kind of movements so much. I usually only do the blow off tops, because if you were to short this now, you could get stopped out with a bounce back here. So unless you go into a free fall and you catch it, then, and you're experienced with that, that's okay. But I would be setting up for getting a really good position when we bounce back up and put in a long, so that, like for example, if we put in here, stop losses be damned. You don't need to worry about stop losses if you're bouncing off a bottom, because we're not coming back to that bottom, not in this at all. So this would be a time when, you could put in a little higher leverage, because once it bounces off here and it just goes back up again, we're not coming back down here. So that's I wouldn't call it a safe trade, but it's a good bet. Would you say that, Teresa?
Sorry, I muted myself. Yeah, I would agree 100%.
Yeah.
I think in this market, especially your comment about trading shorts, it's okay to do tighter trades. So if you do want to do the short, in general, I would say, don't expect things to always hit their targets. This is the kind of market we're trading in right now.
Okay. So we want to talk, because today we're talking about, like, we're almost there, like we're almost at the bottom to turn around and go back up into the next bull run. And today we're talking about, well, how do you profit from it? So one of the biggest things that can happen in a bull run is you put your stop losses in the wrong place, so you get stopped out of perfectly profitable trades. And we talked about that earlier in the piece. But now we want to talk about scaling in and out. And I'll let you talk about this, Teresa, because this is one of your strategies, right? You ride the wave up, but you get in such a good position at the bottom that you leave a portion of your trade in, but you take a portion out and then you add to it to go up. So I'll let you talk about that.
Beautiful.
So you can.
Okay, so the first thing you want to notice if you're scaling in and out of trades is
Are you going to share your screen?
No, I'm just going to talk for a minute. What's your emotional response that happens when you start going into loss, or when you're risking higher amounts of money, right? And we all have levels which we're like, I can handle that kind of loss. And then we have other levels where if our trades start to sink into a loss, we're just like, what am I doing? That's too much, right? And so the first thing you always want to decide if you're doing like a multi-day scale in, scale out strategy is, how much loss can you handle watching if the market dips below your entry point, right? And most of us have a number. It's okay to push the envelope a little bit, but if you're pushing it so much that you're freaking out and getting out of perfectly good trades just because you can't handle it going into a little bit of a loss, then you're probably trading too high of a leverage, right? So that's the first thing you want to notice if you're scaling in and out of trades. But the reason to think about scaling in and scaling out is because generally you don't want to get into a high leverage trade unless you've already got a trade open that's in profit and that you've already moved the stop loss up, right? So generally when you're scaling in and out of trades, you're not necessarily taking profit at the very first pattern you hit, right? Like, so let's say there's let me share my screen. Sorry, this is where I do want to share my screen. So let's look at, there's me on YouTube. I was checking the comments. Let's go on the hourly. So numerous patterns marked out here. Okay, so let's say we were in this pattern. We saw the breakdown. We bounced off this, right? So let's say we caught this bounce as a trade. Okay, so we're already scaling in. We know if we cross over this triangle and there's a breakout here, that it's likely to go up, at least to this resistance zone, which is really what we saw, right? So you saw a lot of traders, like Carl on the Moon was one of them. I think Chris might have talked about this, Crypto, I can't remember for sure. But a lot of traders were opening trades at these bounces. And then once we clear other major support resistance areas, you can add to that trade, right? But when we hit this point, there's the moment of doubt and uncertainty, right? Are we going to go higher or should I take profit, right? And so there's this debate you have to do internally, because if I leave the trade open and can add to it here, not only can I add to it, but I can scale up leverage and possibly get into a really, really huge trade. The challenge with doing this mindset is you can turn a whole lot of winning trades into losing trades really rapidly. Because if you're in a wick out or something like this, like it's just a little wick up, and you've scaled in and upped your leverage, and all of a sudden the market turns around, all of a sudden this winning trade just turned into a losing trade, right? So how do you mitigate that? Well, it's a good idea to actually run the numbers and do the math, right? And have a specific strategy in mind. Personally, when we're in a zone like this, where there's a ton of support and resistance, overhead, underhead, etc., right? I wouldn't be doing a huge amount of trying to hold trades open and keep them into multi-day trades. Like, for example, I did take profit as soon as we hit this resistance zone, because I knew we were probably going to run into it, right? And then I added a little bit more to the trade here, managed to trade it up here, right? So if you're keeping these trades open multi-day, it's good to have a percentage in mind. When I hit these targets, how much of the trade am I taking out? And then when I scale up, how much more am I adding back in? Okay. Now, the thing to remember is the minute that you scale out of a trade, it's going to average up your entry price. Or sorry, the minute you scale into a trade, it's averaging up your entry price, right? So let's say you entered here, traded up to here, and now you're adding a little bit more here. If you add the same amount you started with here, it's now going to have the distance, and now your entry price is up here. So now what was a highly profitable trade is only a semi-profitable trade, right? So I normally use, depending on the level of resistance in the area I'm dealing with, a percentage approach. So when I hit the target, if I'm planning to keep the trade open, I often only take 20% profit. So when I come up here, because it's going to average down, if I've taken half out here and it averages down, then my entry point actually is only going to be just below this level. Whereas if I only take 20% out, my entry point is going to be a lot lower. So this is a good strategy to test and try different approaches too. So for example, if you start with a 5% leverage here, you might be able to scale into a 12% or 15% leverage up here, right? But normally you want to have enough space in the trade that you're not bringing your stop loss up to the point that you're taking away all your winnings if the trade turns around the other way, right? So you want to make sure you're using some approach. In this kind of an area where, you know, we're kind of expecting that this is going to be a tough area to get through. So there's going to be a lot of up and a lot of down and a lot of up and a lot of down. Personally, in a zone like this, I only do a little bit of scaling in and out, right? In other words, small percentages. And then, you know, when I got up here, I literally closed out my trades because I figured, you know, let it come back down. Let me place another long. I'm not confident enough in this short because it's not clear what the market's doing right now, as far as I'm concerned. I mean, it's very short-term bullish, but I'm not trading on such a tight time horizon as some traders, right? When we get through an area of resistance like this, though, we can expect, like, you know, it's looking strongly like we're creating an upward trending wedge here, right? When we break through this zone, we're probably going to see really big price movements at that point. So this is going to be a good zone. Like, we're going to hit some resistance up here. We're going to hit some resistance at the fib levels. But once we're through this area of major resistance, scaling in and scaling out is going to get a lot easier. So if you're wanting to keep multi-day trades open, I would always take profit when you hit the major targets, but take less. And then move your stop loss up a little bit, you know, keep your trade in profit as you're adding in.
When you say the major targets, you're talking about the Fibonacci resistance levels, not the actual
either the fib levels or the target of the pattern. So let's say this upward rising wedge breaks out, right? So we could actually do a measured move. Whoops. Let me pull that line up here. So let's say we're getting up here and this wedge is playing out and we have a breakout up here and we've got a measured target here, right? But we've got this major area of resistance here. So we're thinking the market might turn around at this point, right? And often we've got a pattern within a pattern, right? So for example, we might have a smaller wedge that's breaking out and its target's here, but there's also the target of the bigger wedge that's breaking out up here. So we're not sure if the bigger pattern's going to play out or the smaller pattern's going to play out. So we might take profit at the smaller pattern. When it breaks through that area, we might then add back to the trade and scale up the leverage. I wouldn't do this in huge increments, though, is the point, because it's easy to get wrecked doing this in huge increments. So practice this with smaller increments and smaller increases in leverage till you start to understand how the market's performing and how this strategy works for you. And then you can create a rule book for yourself for how to do this effectively. Is that making sense?
Talking about rule books, we had Joaquin has asked the question, do we keep a trading journal? And he would like an example because he's thinking about doing one. So we'll get that ready for you for the next live stream we do next week, because we need some preparation time for that.
Yeah, that's a great question. The answer is absolutely yes. And we can talk about that more next time. Yeah.
Yeah, we also take journals of how were we feeling, was it a sunny day? Sometimes I'll write down how I was feeling because of what I ate. So I know that, if there's a pattern forming, that if I eat something versus something else and it makes me feel crap and then I make a really bad decision, if there's patterns there, then I can adjust my patterns of behavior.
Yeah. And
so the bottom
when
line
I lose a trade, I always make a record of, was it FUD or FOMO that had me, like, did I enter poorly because of FOMO, or did I move my stop loss up too quickly in FUD? Sometimes you just can't predict the market, like, because you don't know that Elon Musk is about to put a tweet out that turns the market around. So sometimes a perfectly good trade just goes south. But sometimes it's, you didn't enter powerfully, you tried to jump on a moving train because you had FOMO, or you moved your stop loss up too quickly because you had FUD and you didn't want to turn a winning trade into a losing trade. But I always make a record of those things, and I start to look at what are my patterns if I do have a sequence of losing trades, so that I can stop. One of my personal rules is when I do lose a trade, I don't trade again for 24 hours. Because one of my patterns, and everybody has different patterns, but one of my patterns is when I'm in a losing trade afterward, I tend to make bad decisions. That's my personal psychology, right? So I make sure I give myself enough space and window. I don't do the get right back up on the horse if you fall off. For me, that's a scenario for losing more money. So I make sure I take a time out and come back to the market later.
Yeah, we don't have much time left, so let me just go into XRP. XRP is in a little bit of a dangerous position at the moment. I've been feeling really bullish about it. We've been in this symmetrical triangle here with these blue lines, and why don't I just do that? You can see, if we come down here with the mouse, we've got the slope where we've been creating lower highs and then higher lows, with 64.84 was the lowest amount that it is. So at this stage, it looks like that we are about to break out. If not, we've broken out, just depending on how you've drawn the lines. So let's go down into the 1 hour because it's not quite so busy. And we're at the pinnacle. So today or tomorrow, XRP's got to choose a decision. Like, it's got to make a decision. Which way are you going to go? Unless it just ends up just trading sideways. But what we have done here is we have broken down from this, here's the blue lines here. We have broken down from this wedge, boom, broken down, coming back up, meeting resistance with the EMA. We may come back up to test this as support, come through and break to the outside. We may get rejected. And if we get rejected and start coming down, I would say that there's going to be quite a lot of FUD that could push the price down. And we could go back down to this level here at 82 cents or 82.62, because this is here's where we are right now. Let me just get rid of that so you can see it. This is on the 4 hour. You can see it a bit better. right? Coming down here, we could come back down here to test this as support and then bounce off of here. Or we could come all the way down to this Fibonacci level here, which is 7818. And then, of course, the actual bottom for this symmetrical triangle is 67 cents, in which case we could go down, maybe not as far as 67, we maybe go to 68, confirm that as the bottom of the market, bounce off of it, and then come back up. I mean, bottom line though is that we have been looking pretty good with XRP. It's just that we could probably bring this line down and go, oh, we haven't broken out yet. We've still got a few more days to go. Like, this is where analytics can be a bit subjective. But bottom line is we're needing to make a decision here really soon on XRP. And then if we break to the upside, the target's $1.31, but there's a tremendous amount of resistance between 95 cents and $1.05. So very similar to Bitcoin on its way up, it's going to meet resistance. But the bottom line is that I don't think we're going to see those lower prices. I could be wrong, and I'm really okay to be wrong about that. And part of the reason for that is if we go out onto the daily and look at this pink line, this pink line represents the trajectory of the daily averages from the very first time that we started to the time that we touched with our all-time low. So here's the whole market structure. And let me just take all that noise out for you. Here's the whole market structure for XRP. And if we look at the bottom and then we drew a line all the way up to where we bottomed out when we trashed the market and came all the way down here. If we keep going up on that trajectory there, that takes us to, I think it's about 80 cents. Let me go back with the noise. It's this pink line here. So let me zoom in for you. I know these charts are, see this pink line here? So that if we break down here at the moment, we would go as low as 75 cents. If we break down in a few more days, we would go to 76 cents rather. So the longer we take, the higher the price is. We have not gone below this pink line for the whole market, right? It's just, let me go back to here where you can see the whole structure. Right, we've really respected this line here, and that's one of the reasons why I'm not thinking we're going to be going much lower for any of the coins. Really, the signs are in that we're either about to put the bottom in or the bottom is in. So I'm just looking to see if there are any questions on that. So with XRP again, I would be getting set up for a really good position for a long that would take you up to $1.31 and then beyond. And I just want to talk a little bit about the FUD that around the SEC. That SEC just got granted another 60 days for discovery, which has put the excuse me, it's put the oh no, hang on a second, that's not what I wanted to show you. I wanted to show you the monthly. It's put the end of this there we go. Actually, let me not do that. Let me just start again. So the SEC lawsuit, if any of you aren't aware of, basically what's happening there is the SEC is saying that XRP is a security and Ripple did some bad things, and this has suppressed the price of XRP, and it's trading way under its value. Now, with the SEC being granted 60 more days to do discovery, oh, it's not going to do it for me, has meant that the lawsuit, unless they reach a settlement, we're looking at next year or the end of this year or the next year being the end instead of June or July being the end. So I think we're going to have SEC fatigue set in, and people are just going to go, you know what, we can't wait. we don't want to lose the entire bull run for XRP, waiting to see what the SEC is going to do. And I think that XRP is just going to start doing its own thing. So, and then the suppression that has been happening. And my personal opinion is that that's probably why they wanted more time. They wanted more time to dig up more bullshit, excuse my language, and then delay XRP and suppress it and hold it down. But you can't suppress the price of a coin down for too long. And I think that fatigue will set in and they'll just go, stuff you, we're just going to go ahead and do what we want to do. Because if you have a look at the golden ratio, 0.61, we haven't done a lot of trading above it for XRP. We haven't even gotten to last bull runs all-time high at around $3.50. So we are way undervalued for XRP right now because of the SEC. And I think that in the next week or so, we may see SEC fatigue set in and just go, stuff you, we're moving ahead without you. Because it's really only
a really good point, Nicola, because the SEC lost their motion to require extra information filings from XRP. So things are not necessarily entirely going the SEC's way in this hearing. I would expect when we eventually do get a ruling, if it is in Ripple's favor, that we're going to see the price just rocket here because it's been held down so far below where the price should normally be in a bull run. We may actually see a blow off top, in which case then it's going to be important. It's probably going to go way above its current levels and may come back down. Although I don't think we're going to see it come back down to the current levels if that happens.
No, exactly. And it's like we'll see it go up to maybe $5 without any form of correction. Very similar to what Ethereum did. Could even see it go all the way up to $10 without any sort of correction. So there's going to be some good opportunities, in my opinion, for XRP. In the short term, though, we are biting our nails to see bad habit, to see are we going to go back up here, come back into the pattern and then break to the upside, or are we going to break down? So that's what we're waiting on for XRP. And normally speaking, when you're at the pinnacle of a pattern like this, you don't want to trade it because there's a little bit too much volatility. You want to get ready for a very strong position when we break out either side. So we said we were going to do ADA really quickly as well. Cardano is one of my faves. It's down at $1.50. Mm-hmm. And it's trading. Yeah, it's trading quite well within this ascending wedge support line, which is now currently sitting at around $1.35 and creating higher lows and higher highs, just very quietly and very slowly going up. We had a failed W. There's a W here. And I interviewed Da Vinci J15. We're uploading that interview tomorrow this morning. And he was saying that there's been so many W's and M's in the last couple of weeks that have just failed. They've been completely invalidated, that they're not really good strategies to trade right now just because of that. We've had so many of them that just never came to anything. But where we're at right now is just under the channel. It looks like we've got a red candle here. It looks like we might be continuing down. And of course, if Bitcoin goes down to close that CME gap, we might come back down here to touch here. So we've got a nice long position potentially happening here in the next, 6 hours, maybe 24 hours, where once you get the green candle above this ascending line here, you can ride it all the way up to the top. Because if you have a look at what's been going on over the last week, it's been going up, down, it's respecting this support line, except for this little something about Mary here, and this resistance line, and then the support line under here. So this is, we've got a very good tradable event coming up here for ADA. So finally, let's talk about the Conscious Crypto event that we've got coming up. We're having an online conference, the first conference ever for cryptocurrency traders that is going to combine technical analysis, in-depth conversations, strategies, things that some of the YouTubers who are coming to speak at the event can't tell you on YouTube. They're going to be able to tell you in this format, and it's so exciting. And we're combining that with mindset and psychology.
Yeah, we really believe that 80% of trading success is actually mindset and psychology. There's a reason 80% of traders lose money, and it's not because they don't understand the technical analysis. The technical analysis is the easy part to learn. The figuring out how to not be your own worst enemy and hanging on to losing trades too long, or moving your stop loss up too quickly, or jumping into trades not powerfully because you've got FOMO going on, and then a minute later it turns around and you could have had a much better entry position because you were just FOMOing in, right? All of these mindset issues are a lot of what we're focusing on this channel, because you want to not only have a strategy and trade your strategy up front, but you want to understand where you take yourself out of the game and get on top of that.
Yeah, definitely. So the structure of the conference is going to be guest speakers will do 1 hour workshops with you. There's going to be question and answers. Then we're going to have panel of experts going over things like what are the best indicators and how, what other analytics can you use out there to help you. We're going to have somebody come in around tax structure, going offshore with your crypto if you are wanting to do that. We're talking about altcoins. What are the best altcoins? It's in September, so we're right in the last quarter where we could just see a tremendous run, and then of course the end of the bull run into the bear run. So we're going to be looking at strategies, what to do with all of that profit so you don't end up giving it to the tax man legally. Like, what can you do legally? And then we're going to be doing mindset, emotion management. So the expert panels are really great because you'll get to ask questions directly to some of your favorite YouTubers. And then the workshops are more in depth on training and learning more deeper technologies and so on. So far confirmed, we've got DaVinci J15, we've got Marzel Money, we've got the guys from Mango Research, Kresha and Sean, have said tentatively it's interesting. We're talking to Nomad Capitalist. We're in the process of looking at his schedule right now with their assistant. I've reached out to Crypto. Chris from Crypto has said yes in theory. Just got to nail that down with his assistant as well. We've invited Ivan on Tech, BitBoy Crypto. George from Cryptos Us is looking really good for a yes there. We're in the process of working through that, and some other speakers. So all in all, there's going to be 18 YouTubers in the crypto trading space, whether they're traders themselves or they service traders with tax advice and so on, so that we can be in a very strong position going into that last quarter of the bull run. Is there anything else you want to say about that? Oh, tickets will go on sale hopefully next week. We're just finishing off the website, finishing off the speakers marketing, and hopefully we'll get that live for you next week, and tickets will go on sale, and you guys who are subscribed to us will get a message from us with an early bird ticket price.
And you want to be in the room when it happens.
You do. You're going to save hundreds. You're going to save hundreds of dollars. Yeah. I mean, I can tell you the ticket price. The early bird special is going to be $247 for 3 days of workshops and tutorials and expert panels. But the full price ticket will be $750. So if you drag your feet, you'll pay more or not get a ticket altogether, because we think we're going to sell out really quickly. But more on that to come. We just wanted to let you know that that's coming, and that's it from me and Teresa.
Until next time, trade consciously. Thanks for joining us, everyone. Don't forget to hit the subscribe